Good evening, everyone. My name is Nihar, and I have with me Kalyan, who heads acquisition. Thank you for joining us on a Friday evening. And today we're going to be talking about our latest investment opportunity, which is going to be in Gujarat. And this is our first asset in Gujarat. And it's great to see more than 420 people already joined and more joining as we speak. This itself shows the kind of interest we have in Gujarat. And we've been waiting for almost more than a year to get the right asset onto this particular platform for you. So today we're going to be talking about this opportunity, which allows you to invest in 123,000 square feet of grade A warehousing box in an industrial park, which is called Mascot Industrial Park. This is a park which is spread across 85 acres and completely occupied. And the total asset size is about 123,000 square feet across 4.4 acres of land area. The total opportunity cost is about 23.9 crores, close to 24. Uh, all in all, makes a great investment case looking at the tenant profile, which Kalyan will talk about. Fresh lock-in and lease of 4.5 years, 9% entry yield, which includes your 0.55% top-up, and an expected targeted IRR, gross targeted IRR of about 14%, 14.4%. So I'll invite Kalyan to take you through more details. And at the end of the presentation, we will be taking all the question and answers.
Thank you, Nihar. Thank you all for joining us on this Friday evening. Very excited to launch our first asset in Gujarat. We have been researching Gujarat now for a couple of quarters. We've been there, we've met large developers, consultants, authorities, tenants, and I've seen and I've found that this is one market, especially in warehousing, it is about to take off. So we believe, for reasons which I'll mention now, that this is a great time to be there. But before that, probably I'll just break this down to the sub-asset class of commercial real estate, which is warehousing. As you can see, half a decade back is when the warehousing boom started. From 17 till 23, we have gone almost 5 times, and the same growth is expected in the future. Very important is this matrix, or where my cursor is there right now. We're talking about grade A supply of close to 6.4 million square feet across the country, but the absorption is 7.7 million. So that delta is the play in warehousing today. Vacancy across ABC is 10%. However, grade A vacancy is single digit because grade A warehouses are always in demand. They're taken up very, very fast. Important to know who are the people who operate out of these warehouses. The largest operators of these warehouses are third-party logistics company. These are the guys who supply consumer goods, fashion, retail, engineering, automobile, etc. Then there is engineering, which is heavy engineering, captive engineering facilities of engineering companies, and automobile having their own captive units. Going on, very important to note that why warehousing all of a sudden in the last 5-6 years has taken such a great shape. That primarily because of something very smart the government has done in terms of policy. First, they did something called China Plus One. So while India is becoming the office of the world that we have spoken before, India is also becoming the factory of the world. And the second is the national logistics policy. With national logistics policy, it covers the wide array of infrastructure. For example, in Ahmedabad right now, we're talking about the DMIC, we're talking about the dedicated freight corridor. The DMIC is Delhi-Mumbai Industrial Corridor, which is around 35 kilometers from our asset. That's the reason why the warehousing market has taken up, especially in markets like Ahmedabad. Now, if I was to tell you overall weighted average rentals across India, we're talking about somewhere in a range of 10 to 28 rupees. Here, we are in a market at a rental of 14, where our asset is at 14. In that micro market itself, the weighted average rental of grade A assets is 16. So below market in the market itself, where we are getting in a grade A facility. Now, assuming that and what has happened in the past, we have seen 3 to 7% rental growth over a year, CAGR growth in rentals. That's precisely why I think this makes a great study and great investment thesis to get into Ahmedabad at this time at 14 rupees rentals. So primarily, this is what, I mean, it's all over the media. We have been talking about this. Government has been talking about this. A couple of snippets that you might have read. Going forward, location, very, very important. I deep down and probably explain this in detail. We are talking about Ahmedabad here in the market. Ahmedabad, for people who have gone to Ahmedabad or not, or probably have not seen it from the industrial point of view, Towards the south, you have Sanand, etc. On the north, you have Bechraji, where you have Suzuki plant of 600 acres, which has a capacity of 7.5 lakh unit a year operating out of there. You have Honda there. And then there are Vitlapur and Kadi. Kadi is where our park is. This is what our park looks like. It's a fully functional park of 85 acres, fully developed with MNC tenants there already operating out of. Now, very, very important that warehousing industrial park has proximity to strategic locations. So 40, 50 kilometers from Mehsana, Ahmedabad, Gandhinagar, etc. Port connectivity is important. So around 300 kilometers from Kandla and Mundra port. Going forward, pictorially, I was to depict this is what I was talking about. This is Kadi. This is where our opportunity is there, where we would like to invest. And this is where the Suzuki plant is. This is Besha, this is where Maruti Suzuki plant, and this is where the Honda City plant is. As again, on my right, you can see very strategically located, very, very close to all the plants out here and all the nodal junctions of the DMIC corridor. Going forward, we need to know the vibrancy of the market. The vibrancy of the market is always known by the kind of tenants that occupy the market or the occupiers occupy the market. So here we have Tata, you have Honda, you have captive plants, you have Torrent Pharma, you have Ratnamani Metals. So this is a very, very strategic location in terms of a very densely populated industrial facility and industrial area itself, which is Kadi. Now, I mean, Gujarat has been making right noises across, and very, very happy to know what happened recently in the Vibrant Gujarat Summit, that the capex planned by the government is close to 52,000 crores. That's what I was talking about. When infrastructure happens, this is how it helps factories. And when it helps factories, it helps the OEMs who make doors, carburetors, heaters, etc. for the cars. And then the facilities which store these products, which are a third-party logistics company like the tenant we have here, which I'll tell in detail. Going forward, extremely important to know that whom we are dealing with. We always make sure that we're dealing with somebody who is ethical, who is diligent, who is financially strong. So here, very happy that we are working with Mascot Infra. Mascot Infra has been in Gujarat, in Ahmedabad, they've been in Kadi, Sanand, Baila, they've been in Surat, 20 plus years of experience, 6.2 million square feet delivered. Under construction, close to 1 million square feet, 85 acres already delivered, around under land under development 200 acres plus. Very important to know, the leverage is extremely low, like sundry creditors, some working capital, etc., but very, very strong balance sheet. Very, very important to know that when we did research on them, we found out that the tenants stick to them, and wherever their existing tenants move, they move only with Mascot. This is the reason why it gives a lot of confidence for us to partner with a developer like Mascot Infrastructure. Now, if we were to invest in this park, very important to see that these will be our neighbors in terms of tenants, if I may use the word. So you can see CAD, you can see Excite. All of these guys provide equipment for cars, etc. And here on the right, I would like to draw your attention. This is the park. And this road that you see here is the Bombay-Delhi highway. So very, very strategically located. We have visited at least 8 to 10 parks out there, and we found that this was, in terms of location, the best. The connectivity is right there here, and that is required for a third-party logistics company. Now, going forward here, this is something, when I talk about how the park looks like, bird's eye view, pure grade A. We've looked at their PB sheds, their primaries, the columns, beams, their secondaries, cemented roads, facilities for the blue-collar workers, and absolutely up and running facility, because please understand that MNC tenants operate out of this park, and they expect and they command some kind of delivery in terms of services and products. And that's precisely why this park is totally full today, and they're actually expanding more. Going forward, I always say this, real estate, the word real of real estate is very important. So very, very important to look at the asset. This is what the entire park looks like. G3 and B4 by 24 is where we are going to be investing. This is spread across 123,000 square feet. And this is how the park is there. You can see it's fully done up. It's totally loaded, and it's fully functional park of 85 kilometers, 50 odd kilometers from Ahmedabad. And you'll see the large tenants out here who have approved vendors for the original equipment manufacturers and the end user also. And the tenant that we're talking about today is very important, because we always look at grade A tenant. So when I say grade A tenant, this is what exactly I mean. So here we're talking about a logistic German 150-year-old logistics company, which provides logistics services, air, land, sea, water, contract, etc. The best of the brands across the world, the best of the names, they are approved by the end user, which basically gives me a lot of sense of security, because the end user himself has approved this facility. The specifications of these facilities are approved by the end user. So it's very, I mean, it's important to have that your tenant is grade A in terms of their legacy, their financials, and their vision of business, which is clearly getting established here. Before I move on, I would like to point out a very important thing here, because we are talking about macros. We must understand that the PMI, which is your purchasing managers index, for FY 23-24 is 59, just a year that ended, and a year before that was 56. Anything above 50 is primarily expansion. So we are talking about expansion of economy, which means expansion of industries. So when industries expand, suppose they're manufacturing a car, they're assembling doors, etc. in the facility, but they have original equipment manufacturers, OEMs are making those carburetors, etc. And these guys need this 3PL guys to store that kind of equipment in their facility. Hence, this is approved by them. So although 3PLs cater to, say, e-commerce relies a lot on consumerism. However, 3PL, which caters to industrial facilities or industrial end tenants, are much more solid because they have a 15-20 year vision. So having said this, this is how the economics, finance, and the mathematics of this deal is working out too. And from here, I would probably request Nihar to take on the terms of financials.
Thank you, Kalyan. So quickly, we'll take you all through the lease terms and other financials as well. So this is a fresh asset, fresh lease and lock-in of about 4.5 years, close to 54 months. We were earlier looking at handing this over by about April end or May. We are expecting this handover to happen closely by about June, July. So the 4.5 years starts from there. So from actually today's date, it's close to about 57, 58 months, very close to 5 years. Very important to note, we are at a per square feet rent of 14 rupees, which is one of the lowest in the parks, while we have other tenants at 16, 17, 18, and one or two of them at 21 as well. So we are at 14 rupees, and at this 14 rupees rent a month on 1,23,000 square feet, we are touching about 8.5% entry yield with a year-on-year escalation of 5%, which is why we feel that we are already in the money, and the yearly escalation will result into a great capital appreciation when we're looking to exit this in a couple of years or probably 3 to 5 years from now. As mentioned, the escalation is about 5% year on year. We have close to 51.5 lakhs of security deposit. In Kadi, the rentals typically fall within the range of 16 to 20, as I mentioned. So we are below par. We are about 15 to 18% lower in terms of rental. And hence, we managed to get the year-on-year escalation, which otherwise is very rarely seen in a warehousing asset. So the blended cost or overall all-inclusive cost for this asset goes to about 23.9 crores. 22 crores is the gross price, which includes land cost of about 7.25 crores, and balance goes towards your construction cost. I will quickly take you all through the financial model, which also we will share with you. So if you were to, enter the kind of investment amount which you're looking over here, you will see that the average yield which we are making is close to 9.3%, and 14.4% is the targeted IRR. However, I personally feel that, looking at the demand and lack of A-grade supply in these kind of locations, we will be easily able to touch 15 to 16% gross target IRR in these kind of assets, looking at a multiplier of about 1.7 to 1.8 times from here. All in all, what I mentioned earlier as well, a great package for investment, where the location is fantastic, equidistant to 3 or 4 major manufacturing hubs of Suzuki, Honda, Tata, and also equidistant to Mehsana, Gandhinagar, Ahmedabad, and a couple of other locations. Entry yield, very good, 8.5 without the top-up, 9% including top-up. And apart from that, world-class tenant, which Kalyan just spoke about. The terms remain same. 25 lakhs is your minimum investment amount. The rental top-up is about 0.55, which takes the overall return for the first year to about 9%. Performance fees 20% over a hurdle rate of 10%, which remains same as all our previous assets. And management fees 1% till the time you reach 1 crore of your investments with us. Quickly about Strata. It's been more than 4 years that we've been into existence. We are inching towards the 2000 crore AUM. We're at about 1600 plus crores at this point of time, with a very good share of industrial and warehousing, totaling to about 37%. Office is close to about 62% assets, which we have. Retail is just one asset which we have. Uh, Tenant profile in our portfolio have been A grade, and a lot of them, or rather most of them, have been very sticky. We've seen zero vacancy at this point of time, which is great. Even across 4 years, we don't have even a single tenant who's wanting to move out. Our leadership team also remains quite stable, and all of us whom you see on this particular page have been there for more than 2 to 3 years, and some of us have been there from inception. So totally, Strata is about 75 to 76 member team. This is something which most of you know, but for our guests who've joined us for the first time and who are new to investing in Strata, it makes a lot of sense to invest through fractional investment platforms like us, because this becomes a passive investment where end-to-end asset identification, management of the asset, and eventually exiting the asset, all of that is taken care by platforms like us, which is what Strata is doing. We've successfully given one complete exit where we've touched a gross target IRR of close to 15%, and that was a warehousing asset in Jaipur as well. When you invest with us, you can track your investments from anywhere in the world. You can actually get access to the investor dashboard. You also have an app which you can download on your Android phone as well, Android and Apple phones, and you can actually track your investments, make new investments as well. On the dashboard, you will be able to see all details pertaining to your and your family's investments, any TDS certificates, any rental payouts which have been made, receipts for that rental payouts, any insurance and property tax receipts. So all of that is something which you will be easily be able to see on the dashboard, and via app also you can probably access that. Strata has been a company which has been backed by four solid players in the market. Elevation Capital, Kotak, Gruhas, Mayfield, they've been with us for quite some time now, and that has always backed us to go in the right direction, and probably given us a lot of wisdom as well, that what sectors to touch, and where we've seen a couple of months where without any assets, we've been waiting for the right assets and we didn't have any assets, purely to understand that are we taking on any wrong assets on the platform. So we managed to say no to a lot of assets, and wait for the right one like this one. We've always been working with very stable partners, and of partners who've been credible. So Universal Trustee Services offers custodian services. Vistra also has been one of our custodians and trustees. We have HDFC and ICICI Bank as our escrow partners. Recently, we were in news for the kind of vision we have, and also for one of the acquisitions we did in Bangalore, which was we acquired a very iconic building. With your support, we've grown to 4 locations. We have our head office in Bangalore, but we are also based in Gurgaon, Pune, and Mumbai as we speak.